Welcome to Daily Report this morning. We are going to talk about stock investment for beginners. How can you invest in stocks? What is the concept of style value investing like in the investments that I apply? The first question might be, what exactly are stocks? So we know that, for example, in investing, there are various classes of asset classes. For example, as you know, there is gold, cash money, there are debentures, also have stocks, and the intended share is the ownership of the company, so we have a small part of a large company, so these companies that we usually buy shares are listed companies or go publicly companies plc. Small companies and large companies also have shares, but we want to buy public equity shares. So we buy shares of public companies, whose companies have already been registered on the stock exchange. For example, we buy a small pie pizza from very large cake, so the stock is actually not just a mat. Maybe you think that stocks look at your running trades, see the numbers, there are graphs, their stocks are a dizzy as if we speak like an alien. You don't understand what bit over is, but don't worry, stocks are actually as simple as buying a business. So we buy stocks the same as we buy businesses, but the question in this video teaches us why do we actually have to invest in stocks? What the name of the IHSG or Composite Stock Price Index, if all the stocks listed on the securities foam of more than 700 points are combined into one index, some go down, some go up, all of them become this index. So this is a basket of all existing stocks. We'll see why stocks are very attractive investment because stocks give us attractive returns compared to other asset classes. It's true that stocks are volatile, they can go up and down, but in the long term, stocks will generate the highest returns. The concept of risk and return because all investments always have risks and returns. Here we see that there are several types of asset classes. The first is cash, for example money market repurchase agreements, also property bonds, stocks. There may also be private equity and venture capital, which have a higher risk, so the higher risk from return, the lower the risk. For example, cash has no return as well as low bonds. Also, small stocks are volatile, the risk is higher, but in the long term it will generate returns. And the higher the return we want to achieve, the risk will be even higher. Before discuss about called interest here, I will discuss the time value of money. Many people don't understand this concept. If I ask you, which do you prefer? Choose to be given 10 million now or given 12 million but in 10 years. The correct answer is, choose 10 million now because 10 million now is more valuable than 12 million waiting 10 years from now. Because of 10 million will we be able to invest to generate return for us so that money can work for us. The most important component in our investment can be because this concept of revolving interest or compound interest. From the previous interest it was like a small snowball at first. It took a long time to get big enough. For example, if we investing 1 million with a return of 10% we will get 1,100,000. If next year it is 10% again, not from 1 million but from 1,100,000 earlier to 121. And so on, next year it continues to grow and increase with the same return. Do we need to be really smart in economics to be able to stock? The answer is no. Don't think of your microeconomics as a lesson in alien language, but I will try to signify things that ordinary people talk about as complicated before we buy stocks. We must know that stock class asset instruments have two advantages. The first is, of course, what we expect is a large capital, that is an increase in the share price. For example, it costs 1,000 in 5 years. The second is dividends. Because the company generates profits and from the profits of the company, either it is reinvested into its business or it can share buyback or it can do what is called dividend distribution to shareholders. So dividends, for example, Bank ABC distributes dividends of 1.7%, so the company makes a profit and he distributes to Alan his shares. A real example of a big company, like Apple, like Google, if like him it's more focused on share feedback. Thank you for watching. Don't forget to subscribe, like, and comment. Stay tuned always my channel.